What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Li Auto, popular Chinese automaker traded under the ticker symbol LI. We'll talk about their Q1 results, how they came in this morning. Initially, this stock was selling off in the pre-market, but as you can see during the regular session, this thing's up 15%. So we'll talk about that as well. We're going to compare it a little bit to NIO, its closest competitor there in China, at least from a public company perspective. We'll compare it from a traditional valuation metric. Then we'll jump into the numbers with Li Auto. We'll take a look at the deliveries. The other thing I want to talk about is the margins, how much money they're making on their vehicles, at least from a gross vehicle margin perspective. We'll also compare that to NIO, okay? Because NIO, in my opinion, seems like they're maybe a step or two ahead of Li Auto in terms of how many vehicles they've delivered, in terms of their production numbers, those types of things. So if Li Auto can continue in the right direction, NIO is actually kind of a precursor to where they could be in maybe a year's time or so. So we'll talk about that there could be a good predictive force looking at NIO numbers, comparing them to Li Auto. Then we'll jump into the numbers. Like I said, they just reported their Q1 earnings today. We'll take a look at the revenue. We'll take a look at the profit the best we can. Okay, they put it in the Chinese currency. They convert it to US. We'll do our best to kind of work through these numbers and give you a good sense. Now, the other thing we'll do is we'll jump over to the stock chart on Li Auto. Now, one thing you might be saying is, well, look, the stock's up 15%. I missed this one. Move on to the next stock. Absolutely not. Okay, this stock has been lockstep in a downtrend pretty much all year. I mean, this stock was up at 35, 36, even higher than that. It's traded as high as 47, 48, 49, $50 per share, and it has been on a free fall down. And now we're seeing a reversal. Okay, this is actually, from a technical perspective, actually the first sign that you could potentially buy this stock. So we'll talk about that from a technical perspective, how this one is setting up very nicely. Now, before we get over the technicals, we're talking about a stock that's up 15% today. Their Q1 earnings did top estimates, but their Q2 revenue was below consensus. We got to assume they're probably in some of the supply chain crunch, like a lot of manufacturers, but especially vehicle makers are as well. So we'll talk about that. Now, first thing, before we jump into the numbers, one thing I wanted to do is just from a price to sales basis, Li Auto is not profitable. We'll see that when we jump over to the numbers here in a second. They're not a profitable business, so we can't really look at them from a price to earnings basis. But from a price to sales basis, look, they're almost identical to NIO, right? They're making these cars and they're selling them. Well, NIO trades at 13.5 times sales. They're in this blue line right here. They've traded as high as 30 times sales, so they're trading at about 13 times sales. Li Auto only, and I say only trades at about 6 times sales. Okay, obviously, if you compare this to a Ford or a GM, they trade at like a fraction time sales. So they're still getting a premium to that traditional automaker. But look, from a price to sales basis, either NIO has got to retract a little bit, or Li Auto could potentially catch up if their vehicle deliveries start to catch up as well. Now, speaking of deliveries, here's our deliveries. These are Li Autos. They give you a quarter over quarter view look at the deliveries. Q1 of last year, we were at, this is probably, I would assume, this is maybe in thousands. So that's 2,800 or 2,900 or so. Then we went up to 6,600. Then we went up to 8,600, then 14,000, and a little bit of a drop from Q4 to Q1. Some of that could be explained. I think you got the Chinese New Year in Q1, and so some of that buying and things like that could be delayed. Also, it looks like Q4 tends to be a big quarter for them, so kind of comparing that quarter over quarter, not necessarily something that you can do. Even though we've staircased up all the way to Q4, we take a step back. Notice that we went up to 12,579 vehicles, over 2,900 in the year before. So it was fantastic growth year over year. Now, what I want to show you here is these financials look identical to NIO. I tell you what, if you learn how to read one of these guys' financials, you can learn how to do both. It's almost like they have the same accountant. So this is for 3 months ended. These are just their key kind of high-level financial results. We'll go into the more in-depth ones here in a second. But these have some key metrics in here that you can't pull out of the major financials. What I want to show you here is vehicle sales. Okay, so the left-hand column is last year. The middle column is the beginning of the year. The right-hand column is our most recent quarter. So you get a year-over-year view, and then it's kind of like quarter-over-quarter here, the second and third column. And so you get this year-over-year change with up 300%. Now, here's what I wanted to focus on here is vehicle margin. Okay, they only had 8% vehicle margin last year. In the last quarter, it ticked up to 17. It ticked down a little bit, but basically flat from a rounding error perspective, almost flat to 17%. What I wanted to show you was where Li Auto is. So Li Auto last year was at a negative. Well, they were selling their cars for a loss. Okay, they were making them and selling them for cheaper than what it cost to make them. But in Q4, they ticked up to this 17% margin. And then in Q1, they're all the way up to this 21%. So Li Auto, you'd like to see them get up into this 20% margin, okay? And it'll be interesting to see, can these Chinese automakers stay in that 20% margin? Because in my opinion, that's really where they need to be in order to generate lots and lots of profits and get up into these valuations, okay? One thing we missed right in the beginning, this company has an $18 billion. That is $18 billion valuation, okay? And when you're delivering 12,000 cars in a quarter, that is a very, very hefty valuation. Okay. That is, that is just a gigantic valuation. Even from a price to sales basis, you're looking at a huge, huge valuation. So vehicle margin at NIO is at 21%. Li Auto's sitting at 21%. So I think there's some room to grow there with Li Auto, and I'd be anticipating that as a shareholder. Now, if it stalls out here in this, high teens, I'd be a little concerned, and we'll see what happens going into next quarter. Now, in terms of the financials here, we've got the 3 months ended here. The left-hand column is last year, middle column is last quarter, and the right-hand column or the third column is the most recent quarter. This is all in the Chinese currency, the RMB. Now, the right-hand column is just the most recent quarter in United States dollars. That's the one we'll tend to focus on. Forgive me if I say dollars when I mean Chinese currency. It's just out of habit on these types of things. So vehicle sales came in at $528 million. Total revenue came in at $545. Okay, from a Chinese perspective, we're seeing just explosive growth. As you'd expect when we looked at those delivery numbers, you'd expect explosive growth from that top line. Now, what you want to look for is what are we doing from a gross profit perspective? Okay, so our total costs came in at $451 million. So you minus it off this 554 and you get down here to $94 million of gross profit. Now, you want to annualize that out? You got a couple $100 million. Okay, couple $100 million, $18 billion valuation. I don't need to tell you that this company is very richly valued. They're going to need to continue to grow, obviously. Okay, now, but from a Chinese currency perspective, we see this company is showcasing absolutely explosive growth from this gross profit perspective, okay? So this is nice, okay, because you went from 68 million RMB up to 616 million RMB. So almost a 10x of that gross profit. You love to see that, okay? Because anybody can grow revenues, but if you're growing them at a profitable from a gross profit perspective, this is good. And this is why I focused a lot on this vehicle margin, because if we can grow this vehicle margin and grow these top line sales, well, this gross margin is just going to get better and better, and this company is going to be more and more profitable. Now, unfortunately, that's not all our expenses here. We've got R&D costs and selling general administrative costs, and those come in excess still of our total revenues, at least from, our total gross profit. So you see here in the United States currency, total operating expenses came in at 156 million. You minus that from the 94. So our revenues were 545. We spent 451 to make that. Our gross profit's 94. We have operating expenses at 156 million. That gives us a loss from operations in the quarter at $62 million. And you see here that for $62 million loss, $8 billion company, those are things that you have to, factor in as an investor. Loss from operations, we see last year they were at 234 million. This is in the Chinese currency. That doubled to 470. Okay. So on the surface, that doesn't look good, but when you're growing your revenues this much and you're 10xing your gross profit, actually only doubling your loss from operation is showing you that they're moving in the right direction, but they've got a long ways to go, okay? So this is a negative $407 million RMB loss from operations. Okay, in the quarter, we only grossed out $616 million. So they're really going to, from that math, they're going to have to almost double their top line revenues again in order to be profitable. So NIO, I don't necessarily think Li Auto, I don't think is necessarily where NIO is in terms of profitability. They've got a little ways to go. That also could be why this stock has kind of exhibited this downward pressure over the last year or so. Now, moving on to the balance sheet, we see that this company lost money. They do have this about $926 million in cash, another $322 in restricted cash. They've got some time deposits and some short-term investments. That's a lot. Okay, I would not, though, assume that this company has not done fundraising. Okay, we've seen Tesla here in the United States fundraise. I think they fundraised twice last year. Okay, a couple $5 billion rounds, three $5 billion rounds. That was twice last year. Okay, and that's Tesla, who's been in business for a pretty long time. This company is still very new and is unprofitable. I would actually expect them to continue to raise money, either through debt offerings, but more than likely through the shares. So that's something that you want to factor in if you are a shareholder. They do have some long-term borrowings here. It's not a ton. Okay, it's $79 million. I know that sounds like a lot, but when you factor in how much they're going to have to invest in this business on top of the competition that they're facing, this is a company I think that's going to continue to be in fundraising mode. So those are some things that at some point investors have probably weighed on this. Okay, when we move it over the stock chart, we see that investors have kind of weighed the negative on this. Okay, they're going to have to fundraise. Okay, they're not profitable. They've got a pretty ridiculous valuation, especially when you compare it to a traditional vehicle automaker. But technically, this stock has completely turned the corner, okay? This was in a very well-defined downtrend, and we broke out of it, and we broke out in a major way. I actually wouldn't surprise me if the stock walks all the way back up into $24 per share. Now, what you really want to see, I'm going to take out this lower trend line because you probably can realize that we've broken that. What I'm looking for with Li Auto is a break above this mark right here, $26 per share. We've got to kind of get above this cluster, because you've seen this stock has been on a downtrend, popped up, but then only to continue a leg down even more. Okay, this thing popped back up in March, ticked up to $27 per share, only to get rejected right at this $27 per share level, all the way down to like the mid-teens on this one. Okay. And so what I'm looking for with Li Auto is it wouldn't surprise me one bit if this stock goes from 23 up to $26, $27. I think you still got another 10, 15% upside in this one. Now, what you need for this to be a complete reversal of a trend, I think you need to see it get above this cluster of $26, $27. That would take out this. All of a sudden, now we would be on positive momentum. When it does that, how it does that, could it do it in a day, 2 days, 3 days, over a week or two? Sure, anything is possible. You get above this $27 mark, you might say, well, and then it's seriously too late to buy. I should have bought down here at 17. No, not necessarily. You get above here at 27, I tell you what, this is probably the screaming another buy signal, okay? You get above 27 here. This thing doesn't have a lot of price. Okay, we got one big green candle here. We got a small cluster of candles here. Got a little bit here. Wouldn't surprise me if this thing walks up into this like $30 range, okay? So I think that from a technical perspective, there's a good $6, $7 worth of upside left in this one, okay? So I don't think you've necessarily exhausted your entire, upside on this one. Now, from a downside perspective, I definitely have a stop loss, whether you have an option strategy with this one, whether you're trading it, whether you want to buy the dip if it dips down. You got, $20, 21 and a half or so is kind of a level where if we break below that, well, then this longer term trend, this was just a fake out, and this longer downtrend is intact, and I would look to maybe potentially get back in down at the $16, $17 range. So that's from a technical perspective. I like what I'm seeing here. From a margin perspective, okay, NIO in Q4 was at 17. They were able to improve that to 21%. I'd like to see Li Auto get us up into the 20% margin rate. Okay, if they do that, I think that will be positive for the stock as well. They are not profitable, and so I think if they can show evidence that they can continue this top line growth, keep these expenses in control, intact, this is a stock that's moving in the right direction. And then from just a traditional valuation perspective, compared to NIO, one of these two stocks, either one's undervalued or one's overvalued, and we'll see how the market kind of handles that forward. Now, from a straight market cap perspective, $18 billion, not that much in sales, unprofitable. Definitely doesn't make sense from that perspective. That's why when we looked at the chart, I kind of looked at this. I focused more on this on a trade because from a buy and hold perspective, it still doesn't make a lot of sense. You're definitely not buying this at a good value, in my opinion, unless you can really, really see deep into the future with these EV stocks and the potential that they might have. So hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.